Today we are going to be looking at Advanced Micro Devices Incorporation, AMD, and Intel Corporation, their financial statement analysis. The sections we are going to be looking at are the overview of the semiconductor industry, the overview of the two companies AMD and Intel, the financial statement analysis of both horizontal and vertical analysis, the ratio analysis, and finally the conclusion, which includes the investment recommendation. Semiconductor industry overview.
Okay, Section 1, Semiconductor Industry Overview. Definition. The semiconductor industry is the aggregate of companies engaged in the design and fabrication of semiconductors. So this basically defines as the industry that makes semiconductor as a product. So the location that we focus of our industry was globally. So we talk about the US, a lot of Korea, and other international countries, right? Our main product, of course, the semiconductors. And we're going to talk about four major players, which is Intel from the US, California, TSMC, which is from Taiwan, really important, Samsung Electronics from Korea, and AMD also from the States. But first of all, I want to define what is a semiconductor. Actually, a semiconductor is a solid substance that has conductivity between that of an insulator and that of most metals, either due to the addition of an impurity or because of temperature effects. Devices made of semiconductors are notably silicon, which is the essential component of most electronic circuits. So it's basically an electronic circuit. Okay, are there many competitors in this industry? There are many competitors, especially 10 of them, which are the strongest one. But we are going to mainly focus in the four of them, which, as I mentioned before, are Intel, TSMC, Samsung Electronics, and AMD. Also, another example of one of their competitors when talking about globally would be NVIDIA, which is also really famous. And actually, some events had really make a shock and affect this industry, which, as all we know, first one would be the COVID-19. Actually, Taiwan was not affected as much because before we didn't have many COVID cases, but currently Taiwan is having a little bit of problem with the COVID-19. So actually they're worried because Taiwan is like the main supplier of semiconductors. So globally, we are like really important when talking about semiconductors, and people is worried because of the pandemic we cannot work. And then we had the drought in Taiwan that this has been like the worst in many years. But right now we're hoping that everything gets better with the rain, right? But actually this drought really affected what is Taiwan's industry of semiconductors. As we can see in the next slide, semiconductor industry, USD 28.8 BN impacted COVID-19. We can see the comparison between what is the sales revenue in 2019 and 2020, which is around 28.8 BN US dollars. It's a lot of money, especially in what is China, and then we have America, Japan, and Europe. And here is the picture of the article, which is mainly talking about the drought in Taiwan and how it had affected the semiconductor industry, especially when talking about production and energy supply and everything. Okay, so in this next slide, we can see the Potter's 5 forces analysis, which is basically the method for analyzing competition of a business. Okay, so the first one I'm going to talk about the supplier power. This is when the technology power supply sector use their negotiation power to extract higher prices from the firms. This meaning that if I supply you, I would put the price on. After that, we have also the buyer power, which is that often demanding. They want to buy the best offering and pay the minimum price as possible. Of course, right? We want the most for a less cost. So they actually also have power on our business, because they are the ones who provide our demanding, which is supply, right? And then we have threat of substitution. Currently, Dropbox and Google Drive are substitute of storage hardware drives, which have a little bit of scared the semiconductor industry, but still haven't affected that much. And then also we have the threat of a new entry. New entrants in semiconductor integrated circuits brings innovation. This meaning that new circuits can totally just throw away what is semiconductors, right? It's a little bit like we can have more competition. It will be a problem for us as semiconductor industry. And then we have the competitive rivalry. Intense rivalry among the existing players drives a lot down the price and decrease overall profitability of the industry, right? Fighting doesn't really help anybody, but it always happens, right? So you really need to take into account these five Porter's analyses for the semiconductor industry, because these five things really affect what is the business indeed.
Advanced Micro Devices Incorporation Overview. AMD is an American multinational semiconductor company headquartered in Santa Clara, California. AMD was founded on May 1st, 1969, and it was founded by Walter Jeremiah Sanders, also known as Jerry. AMD products include motherboard chipsets, workstations, embedded processors, embedded system applications, personal computers, graphic processors for servers, microprocessors, among others. AMD's market share was 2.3% in 2009. In 2020, it became a part of the 44.8% of the group titled as others in the graph. This occurred due to the large amount of competition that AMD faces in the semiconductor industry. The life cycle of AMD, as shown in this graph, is growth. Here we can see AMD's SWOT analysis. Their strengths are brand awareness, having innovative products, and having international operations. Their weaknesses are that they are less seen in the mobile industry, and they have a lower market share and a weak promotional strategy. Their opportunities are the mobile market penetration, new products and services, and new consumer behavior trends. And their threats are rivals, environmental regulations, and the change in FDI policies and semiconductor pricing.
Intel Corporation Overview. Intel is an American manufacturer of semiconductor computer circuits. It is headquartered in Santa Clara, California. The name Intel came across from both words integrated electronics. Intel was founded in the year of 1968 July. The founder was Robert Noyce and Gordon Moore. The investor was Arthur Rock. Some of Intel's products are microprocessors, motherboard chipsets, integrated circuits, network interface controllers, flash memory, embedded processors, amongst others. Here we can see the semiconductor company's market share worldwide from 2008 to 2020. As it is shown, we can see that Intel has kept its market share throughout these years, and today its market share is of 15.6%. Intel's production life cycle is at growth as they continue investing in all their areas to continue growing and expanding. Intel's SWOT analysis. Their strengths are manufacturing process technology, manufacturing capacity, design expertise, well-established ecosystem relationships, cash, a market leader of 70 to 80% MSS. Their weaknesses are they are big, so they can be bureaucratic and less nimble. High fixed cost needs high volume, limited growth potential, mature market. Highly dependent on single product, the CPU. His opportunities are regain lost MSS, expand to new markets like the consumer electronics, embedded, graphics, low cost or low power. Their threats are high performance or low, power upturn, political or legal, GPU-based computing, and the cyclical downturn. Financial statement analysis.
The first analysis we'll be looking at is the horizontal and vertical analysis. Here you can see total assets, liabilities, and revenue, and their account distribution represented as a percentage. We can clearly see discrepancies between AMD and Intel, as many of their accounts, such as cash and equivalents, or long-term and short-term debt, are opposite to each other. However, this is just a general overview, and we will have a closer look at certain accounts later in the statement of financial position.
Additional to the vertical and horizontal analysis, we have prepared a ratio analysis to analyze the liquidity, profitability, and solvency of both companies, AMD and Intel, and compare them to the industry standard. For this, we have prepared the asset test ratio, the receivable turnover, and the inventory turnover as measures of liquidity, the profit margin, return on assets, price-earning ratio, and payout ratio as a measure of profitability, and the debt-to-asset ratio as a measure of solvency.
We will now be having a closer look at AMD's statement of financial position. More specifically, we'll be looking at the total asset and total liabilities, which in the end creates the company's debt-to-asset ratio. The debt-to-asset ratio is commonly used by analysts, investors, and creditors to determine the overall risk of a company. Companies with a higher debt-to-asset ratio have more leverage and are thus riskier to invest in and provide loans to. AMD's debt-to-asset ratio is 0.349, which is below 1. This means that AMD has more assets than liabilities. More importantly, the ratio is lower than the industry standard at 0.420. Furthermore, this shows that the company is able to meet its expectations by selling its assets if needed. The lower the debt-to-asset ratio, the less risky the company is to invest in. We will now be having a look at the income statement of AMD. We can see that the total revenue has almost doubled since 2017, while the expenses have only been growing at a rate of 63%. This means that revenues are increasing at a higher rate than expenses, which in return means that AMD's net income will likely be higher in the future. A large percentage of the mentioned increase in revenue is coming from the operation income, which is increased by more than 400% since 2017. Operating income is the profit realized from a business operation after deducting operating expenses such as wages, depreciation, and cost of goods sold. This increase can likely be credited due to the success of AMD's new generation Ryzen processors. After having a look at AMD, we will now be switching our focus to Intel, beginning with their statement of financial position. We will also be looking at total assets and total liabilities, which again form the company's debt-to-asset ratio. As with AMD, Intel's debt-to-asset ratio is below 1 at 0.471. However, unlike AMD, Intel's debt-to-asset ratio is higher than the industry standard debt-to-asset ratio. This means that the company, while still having more assets than liabilities, is slightly riskier to invest in compared to its competition in the same industry. We will now be having a look at Intel's income statement, and more specifically the tax provision account. The income statement clearly reflects the tax cut introduced by the Trump administration in 2018. The tax reform is generally considered a lopsided victory for the wealthy and large corporations, which Intel is a part of, because it introduced subsidies for the wealthy and large corporations and lowered the corporate tax rate permanently to 21%. This can clearly be seen in the income statement of Intel, as their tax provision amount has more than halved since 2017.
Let's begin with the quick or asset test ratio, which measures the immediate short-term liquidity of a company. As we can see, both AMD and Intel fall below the industry average that goes between 2 and 2.5, AMD having a greater quick ratio than Intel. Now, this means that both companies show troubles in terms of liquidity compared to their other competitors on the industry, AMD having a better quick ratio than Intel. And even in 2019, Intel company had a quick ratio lower than 1, meaning that its liabilities were bigger than its assets. Liquidity measure is accounts receivable turnover that measures how much times can a company collect its accounts receivables. We can observe that Intel falls 2 points above the industry standard, while AMD falls 2 points behind, meaning that Intel can collect 10 times its accounts receivable value during a period, while AMD can only collect it 6 times, the industry average being 8. Our last liquidity metric is the inventory turnover, which measures how many times can a company sell its inventory during a period. We can observe that AMD has a lower inventory turnover than Intel and the industry average, with a metric that falls between 1 and 1.5, while the industry average seems to fall between 5 and 2. Actually, Intel's inventory turnover rises, meaning that it spends more days trying to sell its inventory. Three metrics analyze a company's profitability, such as the profit margin. We can observe that Intel's profit margin maintains constant at a 0.3. However, AMD suffers a great increase in 2019 that almost matches Intel. It is notable to say that both companies have a profit margin greater than the industry average. Metric is return on assets, where we can admire that AMD has a greater return on assets than both Intel and the industry. This is due to their superior first and second generation Ryzen processors that allows them to have a bigger return on their assets. Metric is the PE ratio, which measures the market price per share to earnings per share. In this case, Intel wins as it has the lowest value amongst the industry, standard, and AMD. So definitely, we have a lot of data to analyze to make our decision.
Conclusion.
In order to give a investment recommendation, we're going to take a look over the past 5 years. How have total revenues for Intel and AMD trended over the last 5 years? Intel's revenues have grown from 55.9 billion in 2014 to 70.8 billion in 2018, primarily led by its data center group. AMD's revenue have grown from 5.5 billion in 2014 to 6.5 billion in 2018, primarily led by its computing and graphics segment. Both Intel and AMD revenues have grown at a similar average annual rate. Between 2014 to 2018, Intel's revenues grew at an average annual rate of 6.2%, while that of AMD grew at 6.4%. During that time, Intel's stock price rose nearly 25% but underperformed the Nasdaq's 85% gain. Its manufacturing issues, chip shortages, market share losses, and the abrupt resignation of its CEO in 2018 all weighted down its stock. Meanwhile, AMD's stock price surged nearly 670% as it profited from Intel's missteps. It produced smaller and more cost-efficient chips than Intel, didn't suffer any chip shortages, held its ground against NVIDIA, Nasdaq in gaming CPUs, and stuck to its long-term roadmap under its visionary CEO, Dr. Lisa Su.
Investing. There are many factors to consider before making an investment, such as rate of growth, time frame, and profitability. These three factors will be discussed based on the investment of AMD or Intel. Rate of growth. AMD, which is a smaller company, has huge growth prospects and has emerged as a key rival for Intel. Due to the many unfortunate circumstances, Intel has experienced a reduction in its share prices. During the end of October 2020, Intel experienced a one-year low of $43.61 per share. However, the stock has rebounded by over 40%. Despite Intel offsetting the reduction in its shares, AMD is more likely to offer a faster growth rate to investors. Time frame. If investors are looking for a quick return on investment, Intel is the best option. Despite the decline in revenue and stock, Intel has continued to provide dividends to its shareholders. However, if investors are looking for a long-term investment, AMD is the best option. Yet, AMD shares being more expensive than Intel, investors are willing to pay more, which shows the expectations of greater profitability in the future. AMD looks to be a better long-term choice based on the Wall Street's consensus rating. Profitability. While AMD profitability is increasing, it may take years to reach Intel's level
in terms of revenue generated. In the event that the market takes a turn for the worse, Intel would be the safer bet. Both Intel and AMD average revenue growth was similar between 2014 and 2018, with growth rates approximating 6.2% and 6.4% respectively. Intel generates much more revenue, has a stronger balance sheet, and more significant cash flow than AMD. Investment recommendation. Allocation of $10 million. Regarding the allocation of the $10 million, based on market research, it would be wise to allocate $7 million to AMD and $3 million to Intel. Intel is a titan in the semiconductor industry and has established itself as one of the major players, thus they have the resources and funds. However, despite AMD's high growth rate, the level of income and revenue is not as much compared to Intel, thus majority of the funds should be allocated to AMD. These are the references we use throughout our presentation. Thank you for watching.